Hey everybody, Dave here in Freedom Investing. In this video, we're going to go over my dividend portfolio for the month of May. I received quite a few dividends for the month of May, and I also deployed quite a bit of capital for the month of May. We're also going to answer some questions and the reason why I've been building this portfolio pretty aggressively and what the ultimate goal is with this portfolio as well. So let's go ahead and get started. So I am logged into my Schwab account here, and this kind of shows you a record of where it started. So this started back in early January there, and some of these positions came over from an older portfolio from the month, or excuse me, the year of 2019. I brought over maybe 10 positions over, and I started building this portfolio out. So if you go look at the history of this particular series, the dividend portfolios, I believe it starts around $50,000, and then I kept increasing a little bit here and there through the months, and then we had the pandemic start, and that's when I really started ramping up because we have a 38% decline, and I'm going to go ahead and take advantage of that. So that's the reason why I deposited more capital in the month of March. I deposited a little bit more capital here as well, and then deposited another a chunk of change there as well. And I don't think I've deposited really any. I really deposit, actually, I take that back. I deposit something every month to this portfolio, but not a big chunk usually. It's usually anywhere from $5,000 to $10,000, not a big chunk like this one was here. So that one really was to take advantage of the market decline we had, and the market low was that March 23rd there, and you can kind of see it dipping down, and then boom, it kind of popped back up ever since the market reversed. So I haven't really deposited a big chunk since then, and I really don't have any intentions of depositing another chunk probably anytime soon. Well, I take that back. There might be an event happening in the next week or two, and we'll end up filling you in next month on that one if that ends happening. So right now we're sitting at 191,000 that's in this account between two portfolios. It's two accounts, a retirement account and a tax deferred account. So that's not what's currently in the dividend or deployed into dividend stocks right now. There is a little bit of cash sitting in this account, so waiting to be deployed. So that is where we came from. That's where we are right now. So let's look at where we are headed. So this is where we are headed. So I guess earlier this year I decided to go all in on a dividend portfolio, and a lot of my net worth is tied up into easy passive income. That video I did right here, and it was several months ago. I think I did that video in like mid 2019. And I talked about the 9 notes that I had a bunch of capital in, which is interest income. So I want to get that money out of those notes into dividend portfolios so I can get qualified dividends. So at this time, there is $681,116 in those 9 notes across a combination of tax deferred and taxable accounts. So as those notes bleed off, and they bleed off, a portion of this $680,000 every single month by principal being paid back, that will get funneled into the dividend portfolios. All right. So right now, that's the dividend portfolio is made up of $186,677. That's in the actual stocks itself. Like I said, the actual count's 191 because there is free capital to invest in there right now. So that'll bring up the capital to the dividend portfolios to $867,793. And my goal is to get it up to $1 million, and the time frame is kind of a little bit of a sketchy because it could take anywhere from to 30 years. I don't expect it to take that long, but some of these notes up here are 30-year mortgages, and some of them are 15s. There's a 5 in there, and I think there's a 10 in there as well. So, but I don't expect those people to hold those mortgages for 30 years. So I do expect some capital to be paid back in chunks in the next, I'd say, 1 to 3 or 4 years. So climbing the dividend mountain, that's where we're at right now. When I released this video, 186,677 in early June, and our goal is to get it up to $1 million and reaching the dividend mountain So, and you know, I mean, the time frame on that really is going to be dependent on how quickly I get out of these notes, and you know, obviously there's a discrepancy between 867 and the million. And that's okay, because I do have other capital available that I will be putting into this portfolio, either from my job or from either dividend increases, dividend reinvestments, and other investments that I have, you know, day trading, selling covered calls, selling cash secured puts, or something like that. So we'll make up the difference there. So that's where we're coming from, and that's where we are headed. So let's go ahead and dig into the update. Please take a moment to go ahead and like and subscribe and hit that bell notification. So we are logged into Google Sheets here. I have, you know, 41, it's not really 41, it's minus these two up here. So 39 positions. I did sell one in the month of May, and I know it's going to sadden some people, but it needed to be done. So we'll talk about that in a minute, and ended up what I ended up doing. So all the same positions from last month except for that one. So as a subscriber, I don't even know if he's a subscriber, somebody commented on one of my on my last video on the dividend portfolio and suggested that I stick in the cost basis. So I went ahead and did that, amongst a bunch of other stuff as well. So we'll just expand those out here, and we'll just expand this one out too. Okay, so we're almost fully expanded at this point, other than I think just the industry, so we don't care about that. So I did add the cost basis in, and it was something I really didn't want to add in because it just didn't serve a purpose, really, in my opinion, for the actual viewers itself. Because obviously, honestly, the gains and the losses don't really matter. It's all about, the annual dividends that I get, right? Or the quarterly, annually, monthly, whatever you want to call it. That's what really matters to me. I don't really care. Right now, this portfolio, a combination of both the taxable and tax deferred, is up over $11,000, and that's a 6.3% gain. So that's pretty impressive considering the market's actually down, over 10% right now. And I don't really care about this though. Okay, I do care about this number, but I don't really care about this. So let's just take a look at those two accounts real quick here. So these are the two accounts. I got the taxable and the tax deferred, and the tax deferred has, roughly about $38,000 in cost basis, and its current value is $37,400. So it is down about 3.66%. And then the taxable account, because I've done a lot more investing when the market was down in this particular account. So the market value is $149,263, and my cost base is $136,708. So that's a gain of about 9%, so $12,000 across the two portfolios. We get basically $11,000 gain. So if you look at both of these accounts, there's obviously a lot more decliners and things that are at a loss in the tax deferred account, because like I said, that account had about $30-something in it when I started this portfolio, and I've only put a little bit in there every single month because I only have so many notes that get bled off on the tax deferred side. So that's the reason why there's a lot of decliners over here, and that's the reason why I don't have a lot of decliners on the taxable side, because I've been averaging down and adding a lot of stuff when things were down. So some of these a little bit of misrepresentation, because like for example here, this Apple position showing up over 40%. Well, I bought that on March 23rd, the absolute market low. So that's not like I bought that at 52-week highs and then it went down, then I bought some more. No, I bought that one at the absolute low. So in some of these other ones I might have done that as well. So I don't, like I said, none of this stuff really matters right here, this up or down. Really what matters is this number right here. So that's a record breaking number for me, $6,500 a year in annual dividends. That's over $500 a month now that I'm getting in dividends. I've never ever had that much in dividends. I think 4,000 is the most I've ever had on previous years, and that wasn't when I was even building a dividend portfolio. So So you're probably wondering what stock I got rid of, and that one stock is Disney. I sold it on May 21st there, and I collected over $317 in just that one account. And in the other account, I got $30. So that's a total of $347. And my thinking with that, hey, they just cut the dividend. They really suspended it. Who knows whether or not they're going to actually reactivate it the rest of the year. And it was just dead money sitting there, in my opinion. So I was up over 15% on it, and I collected over $347 in profit from selling Disney. So, and that would have took 9 years to get out of, or 9 years in dividends just to make that $340. So why not just get rid of it? So that very same day that I sold Disney, I went ahead and bought a bunch of positions. So I should not scroll that out. So here we are. Here's the sell from Disney, May 21st, right there. All right. And I mean, this is just showing one account here. It's not showing the other account, but so I sold that Disney and turned around immediately and bought some ADP, JP Morgan, Con Ed, McDonald's, Pepsi, Procter & Gamble, and 3M. So, I put that money to work immediately. That $2,500 pretty much put in here to work right away. So sold that Disney, bought those stocks. So that's the only position I ended up selling, and I did not buy anything new. And I do have, planned to get rid of a couple of positions out of this portfolio at some point when we get back up to 52-week highs, or I feel like there's another position I want to cut. I mean, look at GPC right there. I'm up 25% in that, but it's $500. So I mean, it's just not a candidate. I don't want to cut it. So if anything, what would get cut is probably, and I've talked about this Altria, and I know it, doesn't make people happy when I say that, but I want to reduce this down to about 35 positions. Not right away, but soon. I'd say in the next couple years or so. So anyways, that is what we are looking at for the positions that I bought and sold. Let's go ahead and take a look at the dividend increases we had for the month of May. And right now it looks like, let's see here, we had one dividend increase for the month of May, and that's on Pepsi. So we had a 7.3% dividend increase on Pepsi. So it went from $3.80 to $4.08 annually. So that's a 7.37%. If we compare that against the CAGR here, it's pretty much close. It's just a little bit less than what the even the 10-year CAGR is 7.96. So it's slightly less, but so maybe this pandemic had a little bit of a effect on it. So right now I did add yield on cost to this portfolio. As like I said, that person that left a comment wanted to see some of this stuff in there. I don't really care about yield on cost. 3.84% is what my yield on cost is. The average weighted dividend yield is 3.49, and then actually the annual yield across the portfolio was 3.7. So obviously I want to try to keep this number up here if I can. So I'm obviously doing pretty good because the yield on cost is higher than that. So the average weighted dividend CAGR, the 5-year dividend CAGR is 8.11%. So I'm pretty happy with that. I'd like to keep that above 8% if I can. So, and looks like the beta is still pretty good at 0.82, which means this is a pretty defensive portfolio. I did add a monthly chart in there just so I can kind of compare it against the yearly chart. And sometimes I can just hide that if I get sick of it, seeing it. But part of what I did here is just kind of really showed, what the reason I showed this stuff in here is, really for that person. But I'm glad that I really put this stuff in here. And this is not manual. I don't have to do this manually at all. I just run a script. I export the CVS files out of Schwab, and then I can just import all this data. Pretty much all I do is put the shares and I put the cost basis. That's all I have to do, and then the rest of this gets populated. So the reason I really like to have this in here is because I have a breakdown for both portfolios now. Instead of having just a combined number of shares like we have over here, which I've always shown, I see 100 shares here, 100 shares here, 100 shares here. Well, if I'm looking to sell covered calls down the road, then I really need to know what accounts have 100 shares in it per position. So right here, this is a good candidate. I can sell covered calls against AT&T. I can sell covered calls against Verizon. Okay, and do I have any other ones in there? I can sell covered calls against Wells Fargo. All right, so that's another good reason. It was kind of like, okay, well, if he wants me to put this in here, putting that in there is going to help me as well. But instead, I don't have to log into both accounts and find out what ones I have 100 shares in. So I can see I only have one position over here. That's Realty Income at 102 shares for the tax deferred account, so I could sell covered calls against that. So instead of just looking over here and noticing that I have 107 shares and not knowing what accounts they're in. So in addition to having the breakdown for knowing which accounts have what in it, I can also kind of see which account, how much dividends I get from each account. So I have $5,000 on my taxable side, $1,500 on the tax deferred side, and the reason that matters is because I'm going to be paying taxes on that. So I do have a 9-to-5 job. I do have other income, note income, and other passive income, and I'm going to get taxed on that. So it helps me plan my taxes for the end of the year, and it also tries to make me avoid paying those quarterly tax payments. If I'm over a certain amount, then I probably will end up paying a couple of quarterly tax payments just to cover me. So let's go ahead and look at the dividends I received for the month of May. So I do suck this out of a CVS script file, so that way I don't have to calculate all this stuff manually and calculate how much taxes I'm gonna have to pay and all that. So this is for both portfolios combined, so it's the taxable side and the tax deferred side. And basically we received 10 dividends for the month of May for a total of $334.78. So in addition to that, just if you're curious, what buys did I make during the month of May? Well, I made 32 buys total. There's all the shares that I bought for each position. And then there's the total I spent in the month of May, $19,916. So the biggest position there that I basically added to was Coca-Cola. And I'm almost wondering now whether or not, no it's not, because I actually have more in there than that. So I was wondering if I actually added it in the month of May, but I think I added it in April. But I did add quite a bit of capital to Coca-Cola in the month of May, followed by ED, which is Consolidated Edison, added 26 shares to that, 1871, Verizon, 3M, I keep buying so 22 shares got added for that. JP Morgan, and that was 12 shares. And so you can basically see that I added a lot of different positions, not every position, but quite a bit of positions. And I don't plan this out. I look at stuff that's down for the month or for the day, and I add in randomly throughout the month. So there is a lot of this stuff isn't really planned. The only one that was really planned was probably Coca-Cola there, because I wanted to get the position to be a little bit more weighted in the portfolio. So if you're enjoying my content, slap that like button, hit that subscribe and bell notification. So here we are looking at the portfolio sector weight. So right now it looks like consumer staples is at 20%, followed by information technology at 16.1. And then I guess the third place would be financials at 10.9 and consumer discretionary at 10.8. So I do try to keep information technology a little bit higher than 16%. And this is the S&P 500 sector weight over here. So I try to keep it close to that, but obviously it's not quite there. I am heavy consumer staples, but I'm okay with that because that is a little bit, that's defensive. So essentially we have consumer staples as the number one income producer there at 18.3. Followed by financials. Well, I guess the second would be utilities. So I'm having utilities, which is where you're getting, a lot of the defense from as well, low beta stuff. So then I guess the next one would be financials at 11.4, followed by healthcare. So I'd like to get healthcare up a little bit more as well. So that follows that up. And the last thing we're going to do is we're going to update the dividendometer and the dividends received by month. So right here we got May of 2019. We're going to go ahead and update this chart and also the other spreadsheet for dividends received. So let's go ahead and run that script now. And there we go. 10 dividends got updated, $334.78. So we saw the dividend meter go up. We saw the month of May go up there. So, and also dividends received here. So what that script does is basically just writes this particular line right here across the dividends that were received. So that $334.78 is right there. And then it updates the chart here. So that's it for this one, everybody. If you have any questions, comments, or concerns, go ahead and leave a comment below. And you can hit me up at Instagram, Facebook, or Twitter as well. So I hope everybody has a great weekend. We'll see you in the next update. And go ahead and like and subscribe. We'll see you in the next video. Thanks for watching.